Hey everybody, welcome to the Bullish Rippers YouTube channel. We post all the recordings of the Rippers Twitter Spaces to this page. So, if you ever miss the Twitter Spaces, this is the place to come and check. Make sure you're subscribed and hit that like button if you enjoy.
Let's go ahead and get started. We're going to go around, give everybody some initial time to talk about today in the market, anything that they have listed out for Power Hour, any ideas there, and then we'll probably roll into some earnings as well. I know that we have loose earnings and some other ones coming out in about an hour. Before we get started, Evan, is there anything else you want to preface this with, or anything you want to say?
Not too much, just looking forward to this power hour. We're going to talk through some plays and thoughts on the market. We'll get into some Q&A and get into some nice live earnings after. We do have Zoom, Lucid, Workday, a couple others in there after the close. As all of our speakers are speaking, these are all very knowledgeable and smart people, and you're going to hear that through what they're saying. Just when people say something that you like, just click into their profile, check them out, give them a follow. It's free. The truth of it is you can hit that unfollow button if you realize something later that you don't enjoy it as much. You're not going to, but that option is always there. So just as you're listening to the people, I think that Twitter Space is a fantastic place to really build out your timeline and the quality. And I think you can go ahead and right now just follow everyone up here, but definitely as they're speaking and as people are saying good and fantastic stuff, just know in there, go into their profiles, check them out and see what they're doing. But very excited for the space, and I'll let us get into it.
Perfect. Yeah, and as Evan mentioned there, this on this Bullish Rippers account, which shout out Evan, just hit 18K. My name is Galv Blacksburg. I run the Wolf account. You can see it up here co-hosting. Feel free to check that one out as well. I host 2 spaces a week from the Bullish Rippers account. This week I'm doing a power hour today as well as a market analysis on Wednesday evening at 8:30 p.m. EST. Stock Market News does a long-term investing space from this account on Thursdays, and we just bring on some of our friends and great contacts and new people a lot of the time as well onto these shows and just showcase a little bit of our community. So with that being said, we're going to get into it, talking power hour, talking opportunities for the week as well as the last hour of the day. And Catherine, I would like to start out with you first, just overall gist of the week in the market coming out of the past week and weekend.
Well, I think we all kind of understand that right now it's Russia and Ukraine front and center. I think I was reading FactSet's just like market synopsis earlier today, and they put it best. Like, there's really not much going on outside of geopolitics right now. So for us here at the street, if you're not familiar with me, I'm a journalist, so I can only talk about the biggest news stories that we're following. But sanctions, we've broken that down. The Swiss breaking their neutrality, which we haven't seen now and probably will be for the next couple of days. What's going to happen with Russia and Ukraine, and how is this going to impact companies? We're seeing companies such as Airbnb offer free housing to up to 100,000 Ukrainian refugees. We're seeing the big oil companies try to divest from their investments in Russian oil. So right now, news-wise, that's the focus.
So in accordance with that, do you have any expectations or ideas around how, market reaction? And then, as you've been looking into that on the news side of things, have there been any stories or supply chain or anything like that that stands out to you that may end up affecting different areas of the market?
Market-wise, I think that it's tough because I think that the argument is, and I've talked to so many people about this, the argument, of course, for long-term investors is that this shouldn't really matter to them, right? But we all know that that's not the case, especially when you see the markets take a leg down, like we're seeing the Dow down 500 points. You can't help it. You're going to feel anxious about that, whether you're long-term or a day trader. That the nature of humans and the nature of the market, the unknowns that we're seeing right now could lead us to have a couple more days where it's down. But in speaking with, my sources who are more technical analysts and whatnot, they're looking at the data and seeing that there's still room to run, but it might not be a rally that could be functional or no, I don't want to say the word functional, a rally that could continue until we kind of get more clarity on this current situation. Sustainable. Thank you. And all of that is to be said because we're still looking at the March Fed meeting. And, today we heard from Bostic saying that they're looking at, he would support a 25 basis point move in March. So did I answer all of your questions, or was there one more that I didn't answer?
Yeah, I think you hit on it pretty well. I was wondering if there's any sectors in specific that you would be watching to react to the situation.
I mean, right now, so for the Action Alerts Plus portfolio, which I work on
Evan, can you hear
for
me?
the street.
Thought I was able to
Yeah,
still
I hear
talk
you.
there.
Yeah, I hear you. I hear her too. Sorry. Continue, Catherine. Apologize.
Oh, no problem. So for the Action Alerts Plus portfolio, which I host a daily show on over on the street, I'm really focused on banks because they have a position in Morgan Stanley, and we're going to be hosting our monthly call on Wednesday where we dive through all the positions. So banks and software and semiconductors for me are the three that I am closely watching and trying to dig in and do some more research on.
Okay, awesome. All right, well, hopefully people can hear me because my Wi-Fi is again at an Airbnb and it's trash. So with that being said, thank you,
Yeah.
Catherine. I got about 90% of it, and I hope that the audience got 100% of it. Really good stuff, and appreciate you being on here today. And
Thanks for having me.
Yeah, absolutely. So we have a lot of speakers on today. We're going to run through everybody, give them each a chance to speak. If you need to go sooner, or if you have a point to come in on, if you already spoke and you just want to come in on, just throw up that hand. Feel free, and we'll use that as the easiest way to moderate. And I think that'll make life easy here. Okay, exclusive. You want to go next?
Excuse me, you caught me mid-drink. Yeah, obviously today was a extremely profitable day. Most of the positions from this morning that we did on our space, I'm pretty much scaled out except for runners. But seeing where money's rotating into, it's always interesting to see the FANG stocks in general, because a lot of people want them to rally, but we're kind of in the contrary position where we want them to kind of stay stagnant because it gives a chance for other names to catch up or outperform. And in this particular case, I'm looking at Amazon, and now that things have kind of cooled off a little bit per se, we can see that breakout to the upside if the market allows it. So just in general, I'm looking for the SPY to reclaim, the SMH to reclaim, the Qs to reclaim, the Russell to reclaim, and then I'm just kind of watching the NASDAQ to see if it holds the VWAP here. So, there's going to be plenty of moves that are going to come within the next 5 to 10 minutes. MMs will start to show their hands, the algos will start executing buys and sells, and we'll see what happens. But as positions make themselves known, I'll raise my hand on the space and call out what I'm buying.
Perfect. Thank you, sir. Appreciate you being on here. Great morning with exclusive. We did a couple hours on spaces, and everybody on there definitely was having a good time. All right, let's go on over to Trading Wars. So first time having you on. Excited to hear your thoughts on the market and opportunities for this week.
Hey, thank you so much for having me. My first time here. My name is Rich. I'm a CPA. By day, I have my own consulting practice, and then I've also been trading the stock market for 7 years now. So I really appreciate the opportunity. So for me specifically, it's been a really day trader type of market. There's a lot of volatility intraday. One thing that happened very important today that I wanted to bring up to the community was we broke the weekly high of SPY today. So last week's high, we broke it by a few cents, and we immediately had a pretty big sell-off. So that's going to be my line in the sand for the rest of the week to see if that level holds. Because a lot of times when we break weekly highs, if there's not a lot of follow through, that's basically a bull trap where there are some buyers that got stuck buying that breakout, and that could lead to more downside potentially. So that's my line in the sand. It's at 438.20 on SPY. Otherwise than that, I had two good day trades today. I'm not sure if people are familiar too much with my work, but I have my own free indicators that I have for the community, and I have all my strategies are free on YouTube. So if anybody's interested, you could check my channel out there. But definitely just looking for that weekly pivot now. If the market continues with this kind of selling into the close, I wouldn't be surprised if that ends up being the weekly high for the week.
So that 438.20, is that a line to go long?
So the weekly high from last week was 437.84, and then we went to 438.20. So we went up about 50 cents, and we immediately reversed. So the way that I would trade that is, yes, if we come back and retest that level sometime this week and break through it, that would be a nice opportunity to go long. Or we could double top potentially, but from a risk to reward perspective, it would be a nice attempt to see if we can squeeze higher. If I'm shorting any other positions throughout the week, that will be my maximum risk. So that's where my line in the stand stop loss will be. And so we'll see how we open tomorrow, because with this market, I just wait for the open every day, because there's a lot of gaps. And with the gaps, you just have to react based on what's actually happening in the first 15 to 20 minutes rather than try to speculate with holding things overnight.
Very interesting. Yeah, I mean, that makes sense for a lot of people. They want to get in and get out, maintain high cash position while there's market turmoil. Are there any names outside of SPY that you're looking at for the rest of the week?
Yeah, so I actually post picks every night, 4 picks. And what I do is I have my own scanner, and I basically scan for consolidation, and I just take breakouts every single day. So I post those on my channel if anyone's interested. And what those patterns are either inside or outside bars. And generally with an inside bar, so if we close inside today on any name, let's just say, I don't know, AMD, right? There's a 70% chance that it's going to break the high or the low of that inside day. So using that probability, that's where my edge is. So today um, we had Roblox this morning that I took for a long. So I'm gonna run the scan at the close and see if we had anything that closed inside, and then I'm gonna be just basically taking simple breakouts into the next day with good risk reward.
Awesome. Love it. Anything else you want to add here before we keep it rolling?
No, just thank you, and I appreciate this very much. And just I would say personally, I'm just leaning more towards day trading because there's a lot of gaps overnight, and those gaps can definitely blow up accounts. The last bit of advice I have for everyone is, with the volatility increasing, definitely cut your size down at least by half, because if you were moving, let's say previously 5 points a day and now every candle is 10 points, let's say if you're trading futures as an example, then if you get caught on the wrong side, you can easily blow up your account. And that's something I learned over the years. So just make sure to size down and protect yourself.
Yeah, really, really good points there. Awesome. Appreciate you being on here. And similar to the others, if at any point you want to continue to add information to this, feel free to just go ahead and raise that hand.
Thank you very much.
Absolutely. All right, Jay, what's going on? How you feeling with this market?
Hey, how's it going? Obviously, a pretty busy weekend. So hey guys, so hope everyone's doing well. Got some rest, which is pretty essential these times. So this week is a packed week, not only because of the economic calendar. We have a number of Fed. I pinned this tweet up. We have a number of Federal Reserve members speaking this week, and it'll be important to see whether they discuss what's going on in Ukraine. So Bostic spoke today. He didn't really say much. He's speaking again tomorrow at 2 p.m., where I think he'll have a more elaborate view. Evans is speaking on Wednesday at 9 a.m. He's more dovish. So for those who don't know, they're Federal Reserve governors, and the relevant governors are the ones who vote. The ones who are dovish tend to vote for less tightening. The ones who are hawkish tend to vote for more tightening. And the purpose of listening is to kind of see where kind of the median is leaning. So we have Bullard, who's hawkish on Wednesday at 9:30, and then we have Powell's testimony, which is really important, at 10 a.m. And everyone is going to be listening to that to see whether Powell is moved at all by what's going on in Ukraine. Not obviously it's a tragedy, and our hearts go out to everyone over there. But by moved, I mean whether he feels it's going to affect the U.S. economy. And then we have Williams on Thursday at 6 p.m. So really a packed week from a Federal Reserve perspective. But not only that, we have a really interesting set of backdrop where, obviously, forgive me if this has been brought up before, but you have turmoil in the FX markets because of the SWIFT sanctions that took place. Actually, the currency USD ruble that you guys see on your screen, if you have a Bloomberg or using investing.com or forex.com, that 100 ruble per dollar is actually not the real exchange rate. The runs going on where there are lines at banks like Sberbank in Russia where people are rushing to withdraw their money. They're actually exchanging at like 190 per dollar. So like the actual exchange rates are just absolutely insane. It's kind of like the value of your currency versus the dollar fell like 70% overnight. So I think the Central Bank of Russia is in a tough spot where it had to raise rates overnight from 10.5% from 9.5% to 20%, and that wasn't enough to keep the currency from devaluing. So a couple of things to keep watch on. I think Russia has said twice that they want to speak with Ukraine. I think that these diplomatic talks are really just delay tactics, so Putin can take over Kiev, which has taken him an extra day or 2 days longer than he thought it would actually take. So he's visibly frustrated. Um, I don't think he's going to back down until he gets a strong affirmative from every NATO country that Ukraine isn't going to join NATO. And that's kind of his line in the sand. And I don't know if we'll get there, but until then, there is going to be considerable volatility. So today, there is kind of a rally like we saw on Thursday, Friday last week, which I view as more like a short covering rally or a hedge covering rally. And we faded that, late in the morning, because it didn't really make sense why things were rallying. There's so much excess cash in the market, both institutional and people who've made considerable amount over the last couple of years, which is different from consumer savings, that everyone tries to buy the dip, almost every other day. But in reality, you have a Fed meeting at a time, in March, where the U.S. economy is still growing incredibly quickly. It will slow down, but in December we had a 7.5% GDP print. It's one of the largest GDP prints since World War II, and it is temporary. But the events, I think there's consensus among the Federal Reserve governors I've heard speak so far over the last week that this isn't really going to affect U.S. growth. It will affect European growth. So the ECB, Lagarde, I think is going to put back. I think there's consensus that they would raise rates after this sometime in the second half of the year, one time. I think that's going to be pushed back till next year. But I think in the U.S., we might actually be raising rates into a slowing economy because inflation's rising now because of the impact on crude oil, natural gas, palladium, phosphate, aluminum, everything that Russia exports has gone up materially, including wheat. So if you think about it, Russia plus Ukraine control 25% of the world's wheat exports, right? And those were up 8% in futures last night, which is the cost of everyone's bread and food. And this is not a great time to see more inflation when the Fed can no longer say inflation is transitory. We still might peak over the next few months, but my view is that inflation might be sticky at 4% by the end of the year versus the Fed that thinks it'll be at 2.7%, which I think is nonsensical. And final point, like we said before, inflation is much higher than CPI or PC, tells you, which is a 7.5% print we saw before. And that's because OER, which is owner's equivalent rent, which is one of the biggest parts of inflation, is 4%, and it's not real. It's not a real number. It's just an estimate of rents. We know from just polling and reading what is published by large realtors in the 20 large metropolitan areas that real rents are up 19% year over year. So, whether it's Ackman or any other, institutional investor, like we all understand that inflation is closer to 12, 13%, while wages are only growing at 4.8%. So in real terms, your buying power is actually down 7%. So that is why I think excess savings of 800 billion transfer payments is actually going to come down this year, and the consumer is going to slow spending because in real terms, the power of $1 of disposable income that they have is actually down 7%. And obviously that situation was made much worse by what happened over the weekend.
I do think Wolf has a little bit of a delay coming in here. Can anyone not hear me?
Yeah.
Now I hear you.
Yeah, I'm here. It's just maybe I should just turn off my Wi-Fi entirely. Yeah, I just turned off Wi-Fi entirely. Hopefully that doesn't kill the space. Can you hear me still?
Yeah, I hear you now.
We can hear you. Yeah.
All right. I don't know. The Wi-Fi's shit. I'm trying to work off 5G. But Evan, you had a question to follow up with Jay?
More of a comment. It was up there. It was one of the charts or photos that you shared talking about the Fed speakers and the Fed members and who's the voting members and what it was going forward. I thought that just was a fantastic chart that I do plan to use going forward a little bit. So just wanted to give you a shout out for that. The two speakers you were talking about today, Bostic and Evans. Was there a third one in there? Because they're both non-voting members, right?
Yeah, they are non-voting members, so it wasn't really as meaningful. I think the bigger speakers are going to be again Evans on, Bullard on, who's very hawkish. We've heard him. We already know what his spiel is, on Wednesday at 9:30 a.m. and then Powell at 10 a.m. And then Williams, I think, at 6 p.m. on Thursday.
Awesome, dude. Appreciate you, Jay. Big shout out to you. Definitely one of the best interest rate Fed guys we got on here. So big shout out to you. Wolf.
Appreciate it. Thank you.
Yeah, it looks like Matt has his hand up, and then I saw we got John W. Rich came up, and I know we still got to get to Brad and TSDR as well.
I know TSDR had to get off soon, so we should go to TSDR.
Oh,
yeah.
Okay.
Yeah, go ahead. You can go first. I was going to feed off of what Jay said, but TSDR.
No, you can continue off what Jay said. I'll go after you, Matt.
Oh, okay, buddy. Okay. Yeah, Jay had some great points. And also some things on the calendar. I think Biden is tentatively speaking tomorrow at some point to address what's going on. Also, pay attention. A lot of commodities prices have worked overnight into gaps that haven't been filled. We saw oil and gold both spike up and maintain gaps overnight. And I think there's an OPEC monthly report on Wednesday, so we can expect to see some volatility there. As Jay had brought up a very good point about inflation. And if you look at something I posted and shared at the top, the Commitment of Traders report is something that we look at in the futures market, which shows you can basically derive a lot of information from it in a very storybook sort of high level fashion. You can see that the asset managers, which is a net long position, pretty much the market, have been selling since last July, and the market has been squeezing up on short squeeze because those old 2-year-old COVID shorts have been covering as their insurance has become overwhelmingly expensive to maintain those shorts. We didn't cycle back down the second leg of COVID. So the market's been extremely liquid. And one thing you'll know about liquidity is liquid markets don't crash or sell off. They typically maintain and appreciate at the rate of inflation. As Jay is talking about the extended lack of buying power of the dollar, you're going to understand that even asset prices such as equities will inflate at the rate of inflation. That old adage of markets always go up or indices always go up. They do because inflation makes the value of everything go up and the price of things go up because it costs more labor to buy that thing. So even stocks aren't immune to inflation. And so what we see right now is a mix of tumultuousness from the idea that war can bring some kind of volatility to the markets. If we want to understand some of the things that we know as traders, what actually causes markets to become volatile or even sell off during wartime is very important to understand. One of the major things that causes volatility is the fear of economic sanctions. And this is why markets do sell off initially, but ultimately war does bring equities prices up because of extended or increased wartime production. So an example, if somebody puts any kind of sanctions on some kind of production of some kind of thing, it creates this large pyramid or spider web that can affect everything else. Cut off oil or cut off production, or don't send them some kind of raw material they need to send something else that the world needs. It slows production down globally. And so initially people start to rotate out of certain equities or certain sectors because of that. But after that kind of takes place, the understanding that that you can have increased liquidity due to people assuming that wartime production will create a stimulus, a need for energy, a need for materials, metals, building, increased production, etc. So you're not going to really see a lot of, I guess, I don't want to say bearishness would be a good term to say, would be what we'd expect from extended period of wartime activities in Europe. But I would say that volatility will be here to stay. And, even with a really interesting thing in that chart that I've shared, with the market being extremely liquid, meaning that every seller has a buyer, people getting out of equities in general are finding shorts ready to cover. That pattern is very similar to what we saw near the base of COVID, which was the start of a very extended rally for 2 years. And what causes that is typically short covering, which is what I was going to feed off of Jay's point. Because he said the last couple of days, we've seen nothing but kind of a hedged rally, which is exactly what best way to describe it. You see rolling into Friday, especially expirations, all you saw were puts. If you monitor unusual activity, puts are getting slammed to the bid because people are just jumping out of the short trade as fast as they can. It's not really new buyers or anything like that. It's mostly just people getting out of the way, and markets are just finding a stable middle ground and bouncing to the middle. I think then the general tone of the market overall is not bearish, and we're liquid. So as time goes by, we're going to probably start to see recovery. I'm just not really betting that it is that now. Today's activities is a great example of that. We've seen some unusual flip-flops as far as really hedged levels. Remember this morning we talked about QQQ at 345, SPY at 435. Those two were completely resisting, right? And then we broke through and we're about to rally through it. Then we broke back down. So what you're starting to see is just it's volatility over. In general, the market's very liquid, but it's short-term volatility. You wouldn't expect the market to break 345, go up, or QQQ to break 345, go to 348, and then turn back around, hit 42. That's unusual activity, and it's some very large maneuvering, probably of some very large firms, but not a general sentiment change. You're just seeing a couple of big plays create little short-term hedging bursts, and that's it. In 3 days in a row, we've opened below key hedging levels, which means this is a short squeeze and it's not a trusted rally. So we'll have to see if tomorrow we open in that similar spot. It's that monthly hedge pressure number we calculate every morning for the indices. And if we do, we open above it, then general sentiment is going to be structured bullish. But right now, this close is not showing any signs of it yet. We're just kind of bouncing between liquidity pockets. So confusing market. So you guys just be careful, if you're trading this. So that's it for me.
Thank you, Matt. Got it. TSDR, you want to go next with what's going on by you?
Yeah, kind of a twist on the talk. These guys are, phenomenal, macro market and fundamental guys. I'm much more technically driven as well. As not to take away from their technical skills, because Matt and Jay as well both have are phenomenal in that. I just am the I call myself the bottom feeder of the market, the intraday 5-minute scalper of some of these moves. I was only able to be at the screens for about an hour this morning. My parents came and visited, but in that first hour and a half, I was able to extract some good moves. I know you guys have heard me talk about the earnings plays that I like to do. I never trade anything going into earnings, but pretty much the majority of my watch list are day one after earnings and day two after earnings plays. It's pretty much my bread and butter of what I like to play, because the liquidity is there, and the range on these stocks is there. Square was pretty much my top watch. We had it, sitting there consolidating for about just below 119, 120-ish for the day. It gave a really good opportunity. Looked like we were going to open slightly red on the day, which is what I love to see, because then we can take a red to green move. It's very, very simple. When it's gapping down, less than 0.5%, 0.2%, 0.3% or so, and you just take the first push into over yesterday's close, and we ended up opening up right at yesterday's close, and you could see the buying pressure on the tape and on the chart from the second the market opened, and so I was able to get into some 125 calls right away at the open in the first 30 seconds, and held. I sold about half of them on the way up in the first half an hour, 45 minutes, and then I was able to get rid of the other half of my position on this second move up closer to around lunchtime in the afternoon. I know I talked last week about how I'm kind of sad that we're coming to the end of earnings season, but I guess I was kind of overlooking this week, because there still are some good earnings plays left to be had that I'm looking forward to, especially since they're reporting earlier in the week, whereas in last week a lot of these were reporting on Wednesday and Thursday, giving me less days to really work with the earnings move. Another one I played this morning was Etsy, and very similar setup to Square, just looking for to break the day one earnings move, and we got a nice little ascending triangle or flat top breakout closer to about 11:15 market time that we were able to extract about $3-4 out of that move. I was very happy about that. CrowdStrike as well. Looking back on the chart, it doesn't look as clean as it felt trading CrowdStrike today, but this was another one that we had this really nice tight inside day on the chart. of crowd from Thursday and Friday, hanging out just below the 50-day moving average, and literally minutes before the market opened, it was hanging out right at that high of Thursday and Friday of about 183, 184ish, and just minutes before the market opened, we saw a push up to about 187, and I'm sitting there waiting to hear the bell because I wanted to get in some options for this immediately, because I saw the potential in the cybersecurity plays with what's going on around the world and whatnot, and I was hoping it would hang below 184 before the market opened, because that would have been much better risk to reward on the trade. But I didn't hesitate and got right in this right away. Took the 195 calls and was able to extract a good gain on this as well. I was a little bit nervous since it made that move right before the market opened. I had to size down a little bit to give myself some more room in case there was a pullback at the open. But yeah, looking forward, I mean, we've got a couple earnings that are coming up today that will be very, very tradable for the rest of the week in Zoom, Workday, Lucid. HPQ is another one. It's an oil stock, I believe. If I'm no, wait, no. Hold on.
HPQ,
Anyways,
that's their computer company, HP.
yeah, that's HP. I was mixing it up with Helmerich and Payne, HP, in my head. But yeah, HPQ is a computer company. And then GoodRx is another one. Amba, NVAX, Novavax. Laser, even Luminar Technology, Rocket Labs, and then a few pharmaceuticals and other companies that I don't necessarily care to trade a lot. They don't have the liquidity that I look for. So yeah, those will pretty much be, depending on their moves that they make, will pretty much be at the top of my watch list tomorrow and for the rest of the week. Continuing to add, see what moves they make, where we're looking at, where we're sitting on the daily chart and whatnot, where I think the best risk to reward is, and then go from there. Oh, Coinbase was another one. Very very similar setup to CrowdStrike. We had a really high tight inside day on Coin. We just needed to break this 182, 183 level, and intraday it gave a couple different entries on Coinbase that were really really tradable. Nice simple red to green move right away at the open, flagged out, and after about half an hour had a nice flag pattern form, and then just continued on from there, holding its key moving averages and whatnot. So Coinbase was another one. I wasn't able to trade this one because I was, like I said, hanging out with my parents for some of the afternoon. And I just missed this one this morning. I was focusing on Crowd, Square, and Etsy and whatnot. But this is what I like to do. And I'm looking forward to one. I haven't looked quite at next week's earnings, but I think I think this might be the last exciting week of the quarter. Don't quote me on that though. Thanks for having me on. It's interesting. The whole market condition is very very interesting. I mean, you could call just today a inside day on SPY. I mean, it's a pretty weak looking inside day with this inverted hammer candle on the daily chart. But we're really just back to trading it within this box, this range that we've been kind of flirting around with, a few times between, 440, 442-ish, 444-ish to, down to this 425 level. So, we'll see how it reacts and what happens, in the coming days with the Fed members talking and to start seeing how the market digests, as more news comes out from Eastern Europe and how the market digests the Fed speakers this week. So we've got a lot in store again. Still not confident in any direction. Going forward, and we'll just play it by ear and take the price action for face value and try to extract some dollars out of the volatility while we have it. So that's about all I got.
Awesome, TSDR. Appreciate you being on here, buddy. And I like how you say, like, that's all I got, but you just gave us the full laydown, like the watch list, the strategy, and everything. Really, really good stuff. So always great having you on. And I do agree with you. This could be one of the last great weeks of earnings right now in this quarter. I know that we're getting SE and a few others that are super, super interesting. Are there like 1, 2, or 3 names?
SE, what a what a monster run this morning! Holy cow! I I was looking at this earlier and just kind of ignored it, but man, from about 140 all the way up to 151, it's an $11 move on this thing. That's almost 10% range on this. Yeah, they've got earnings coming up on the first, so that'll be this week. This will be one that I'll definitely be playing on. Oh gosh, what is that? Wednesday and Thursday, then following their earnings report. But no, other than that, I don't look forward too far into the week. I try to just focus on today and the next day, and then as the days come, we can develop our plan and adjust it accordingly.
Awesome, man. Appreciate you being on there. Okay, let's keep it rolling over to. So first off, we have a couple more people that joined us, but John W. Rich, it's been a while. Are you able to talk, or are you just hanging? No worries either way. If you do want to pop in and teach us all how to become very wealthy, we would definitely appreciate it. I think we kind of need it in this market. But in the meantime, shout out
Fantastic
John.
follow. I
Yeah,
love him. And Money Mag, great follow too. Post some hilarious
yeah.
tweets.
Money Mag was real good. What did they say? Yeah, I tagged Money Mag. It was like a CNBC article of who should be like the next Fed chairman or something. I tagged Money Mag. I'm like, who should it be? And they said Jim Cramer. So I think they're doing God's work over there. All right. With that being said, we are going to pop on over to Brad and Gerg. I saw came up too, so let's get both of them, and then we'll probably be coming close to earnings. What's up, Brad?
Yeah, thanks for having me as always. Really interesting stuff from everyone else. I take, for those of you who don't know, a slightly, or probably I should say a lot more of a long-term fundamental-based approach. So I won't comment on technicals or crazy markets right now because these folks in the conversation are better equipped to do so. But what I will comment on is kind of the fundamental news stories that I've been focused on. So this morning, big bad Amazon, who I've been hearing for the last several years, is going to replace Teladoc in the virtual health space and become the virtual health monopoly, and Teladoc will never succeed, has announced their first of what I think is going to be many integrations between the two companies and a partnership where Teladoc physicians and their leading network of physicians across the nation can now tap into Amazon's Alexa voice-based technology to offer visits in a virtual setting. So encouraging stuff there. It's not going to be a massive immediate revenue driver. It could be in the future if this kind of snowballs into something more. But what it does do is kind of dissuade concerns about Amazon by themselves. If they want to succeed, they're going to need several partners in the immensely complicated, immensely hyper-regulated 15 minutes. Two of my positions are reporting. Both of them are in the elective kind of healthcare bucket. It's Progeny, which is a fertility benefits company, and then the aforementioned report is coming out in a few minutes as well. Just wanted to point out, also talking about Teladoc, but in their report about 10 days ago, or maybe it was sometime last week. Days are kind of starting to get jumbled here, but they were talking about infectious disease, which I know this is not something to be excited about or cheerlead for, but infectious disease in the second half of 2021 growing 35% versus the first half of the year. And what that means for GoodRx's largest segment of prescription transaction revenue is that is directly correlated infectious disease transmission with prescription starts and with Tamiflu and all these things that we take to combat these issues. So GoodRx has been maintaining and reiterating guidance throughout 2021. Segment of its business by far is hit hard by this pandemic, by social distancing, pretty much, or not halting, but significantly reducing and eroding demand for elective care and prescription starts. So we're finally getting through that. I don't know if that's going to come into fruition this quarter in terms of or anything. I will say is the headwinds that GoodRx has been dealing with since it went public are going to start becoming the headwinds that it was dealing with since it went public. I don't know if I said tailwinds there, but they're going to start becoming tailwinds in the very near future, and that should be a boon to its already very profitable and very compelling revenue growth. Progeny is the other report that I have after the bell. I mean, this is a 40% compounder trading around 40 times earnings. So fundamentally pretty solid in terms of profitable growth and market share leads and providing a fundamental diversity in the fertility space via things like lower miscarriage rates and higher live birth rates across the country by meaningful and growing margins. So they're a market share leader in this field. They provide benefits for the Microsofts of the world and the Amazons of the world, and they're going to be reporting after the bell. Usually pretty darn in line across the board for them. What happened with the pandemic was our assisted reproductive technology cycles, or ART cycles, being temporarily halted, which again temporarily greatly impacted their business and resulted in this massive headwind, which is now again turning into a tailwind and going to hopefully result in more acceleration in their top line growth. So looking forward to those two reports to cross the tape. The other one this week that I know everyone else is excited about is Sofi Technologies, which is one of my largest holdings. I again, I don't like to make predictions on quarterly earnings and what it's going to be and how the price is going to react. But what I will say is this company has had accelerating member and product and account growth for 7 quarters, despite the fact that the student loan moratorium that is halting about 50% of volume for its largest segment, which is student loans. Despite that student loan moratorium being extended through the end of May, again, similarly to GoodRx, it is reiterating and actually raising guidance in this case, despite that large demand headwind to the largest piece of its business. That will go away at some point this year, and that, again, headwind will turn into a tailwind. But for now, they're still doing extremely well in terms of consumer-facing money products and Galileo products, and the expectations are very lofty. So excited to see that come across the tape, get more knowledge and insight from Anthony Noto on the recent Technisys acquisition, which really rounds their software offering suite for enterprises well beyond payment processing, which Galileo does, which they already own and operate, but pretty much to everything else. So lending as a service and checking and savings accounts and something that's going to allow SoFi to offer a lot more to Robinhood and Chime and all of these existing enterprise clients they have, while saving costs on the consumer-facing app. But enough about that for hours. But we have so many great speakers. I want to be quick. The other move I want to announce today that I am planning on making probably today or tomorrow or at some point this week. It's very minor, but I'm moving my SMH equity into SOXX, which is basically just swapping one semiconductor ETF for another one with less exposure to Taiwan and less geopolitical risk. It will have absolutely no impact on my allocation to the sector, and it has. It doesn't. I'm just as excited to have an allocation in the sector as always. I just wanted to see exposure in this rapidly changing global environment. I found kind of important, especially because I own a very small position in Ozon, which, if you didn't know right now, is halted on the New York Stock Exchange. So talk about anxiety provoking, but fortunately, it's just 0.5% of my overall portfolio. Hopefully, I'm in the worst shape out of everyone in terms of there. But I'm looking to kind of get rid of geopolitical risk elsewhere, and that's really the only place I see it in the portfolio, and a really easy way to solve that. Yeah, I think that's all I have for now, and happy to talk about anything else or answer any questions later on.
Perfect. Evan, do you have any questions on it initially?
I know GoodRx reports earnings in a little bit. We could talk a little bit more on that one if we want to go a little bit there. But Jay, I see you have your hand up.
Hey, just a quick question on the recent acquisition, SoFi. What are your thoughts on that?
Could you repeat? I'm sorry, I'm having a tough time hearing you. Could you repeat the question one more time?
The recent acquisition.
Right. The Technisys acquisition. So, I'll try not to get too carried away because I could talk for 15 minutes and I don't want to hog anyone else's time. But essentially, I 2 thumbs up from me and from both a business to business perspective and business to consumer perspective. I think it's a large boon to the business. So from a B2B perspective, essentially what it does is gives Galileo, which is their existing enterprise facing product, immediate foothold into 11 additional countries. There's no geographic overlap between these two companies, or very little in terms of revenue. And also what it does is it allows SoFi to So they're always talking about, from a consumer perspective, everything being better together and generating more LTV that way, and being able to go after clients more aggressively because of it. But from an enterprise-facing standpoint, when you're already offering application programming interfaces for payment processing to all of these gigantic neobanks, it only makes sense for these also to want to kind of consolidate their vendors and the third parties that they're using in terms of using APIs for all these other things, like I mentioned, lending as a service, which Galileo was already working on with Technisys to roll out this year. Not only does it help there, but from a consumer-facing perspective, while SoFi does many things well right now, its user interface, I don't think is best in class, and it wants everything to be best in class. Technisys runs user interfaces for the best in class UIs and UXs, so this should be a large and immediate time collapse upgrade to their user interface. And also, what it does is it allows SoFi to forego legacy third-party costs for checking and savings APIs that were running the back end of those two products, and also credit. They were using another legacy third party, and they're going to save about $65 million a year on the bottom line because of it. Which, just for reference, that's 6.5% of their 2021 revenue. Obviously, it's going to become a smaller piece of the pie going forward, but it is not a small piece of the pie right now. Meaningful cost savings there. So I also love the fact that the CEO and the founder of Technisys is staying on as the CEO, and it's going to continue to be run as an independent company, pretty much exactly like Galileo was and how they structured that deal. So yeah, I'm obviously, I should say I'm a shareholder, so I'm biased and excited about the company. And if you disagree, anyone, that's totally fine. And always encourage people to seek out bear cases and risks and alternative theses or theses. I don't even know how to say that on their own. But yeah, in terms of the acquisition, in my biased point of view, 2 thumbs up.
Thank you.
Perfect. Yeah, Jay, you were to say something?
No, I was just saying thanks for the background.
Okay, cool. Yeah, I just saw the mic mute and unmute. No worries. All right, so we made it through everybody for initial comments. We have about 10 minutes until earnings are going to be kicking in. Happy to stay on and do some live talk on earnings, especially because we have stuff like Zoom, Lucid, and more. Also, up top, went ahead and pinned for our next space as well. For if anybody in the audience is interested, we're going to have a pitching space, so you'll be able to hear long-term pitches for actually stocks, cryptos, and NFTs. So we have all three coming. We're going to have 2 stock pitches and then one of each of the others, and we'll be doing that with Asset Dash tonight at 7 p.m. EST. So again, that is the last pin post. You can use just a second to hit that and tap reminder, and that way when we go live, you will get notified. And of course, if that's not your thing, that's good, but I think that should hopefully appeal to a lot of the crowd. All right, we are going into this now. So stock market news. We have about 9 minutes until the close here. Pretty wild day for a lot of these things like Upstart and basically just tech rip today. Any other specific topics you want to touch on before close, or do you want to preface any earnings or anything else you want to hit on?
Yeah, I got a couple things for us. So first of all, with earnings, Jay, Catherine, Brad, Matt, Trading Wars, any of you guys want to jump in there with numbers, thoughts, analysis when we get to that point? We'll love to have you do that. I know actually, Jay, you have a terminal, and I know Catherine, you have FactSet, which is pretty fantastic. So a lot of broad resources that, maybe they're going to be getting the information quicker than me. So excited to hear that if you guys get it, and then some analysis and thoughts there. Quick one question earlier that's been stuck in my mind that I think it was to Catherine. I know we are both very into supply chains, and I actually do enjoy doing the research there. I did see one story today of how Ukraine was directly affecting a market, and that was with Volkswagen, specifically semiconductors, which is because of rare earth metals, one of the few industries that actually is directly impacted a little bit. But Volkswagen actually had to shut down production of 2 of their EV plants in Germany due to shortages related to the Ukraine-Russia situation. So that was one supply chain effect that I was directly seeing from that, just throwing that there onto it. And then just quickly, I'll do some coverage on earnings, give us some light preview, and then we can maybe get some thoughts after that. First of all, I like to go on Earnings Whispers is a good place. They kind of aggregate a lot of the data. It is public. It is easy to see in different places. Seeking Alpha does a decent enough job, but Earnings Whispers is very solid. A lot of the earnings today are going to be early, so around 4:05, 4:10, we should be pretty much close to done. The largest ones being Zoom, Lucid, and Workday, I would say. Zoom is expected to come out at 4:05 p.m. Revenue is expected to be at 1.05 billion, and that is up 19% year over year. And then EPS is expected to come in at down 12.3% year over year. Before I actually read into a couple of these numbers, I do want to maybe throw it over to you, Jay. Are there any earnings here you're watching as we head into it?
Particularly Zoom, right? Because what we've seen is an underperformance of the COVID beneficiaries, and I think one reason why we've seen some recovery is that when you have a geopolitical risk in the market, you see the yield curve, basically from the twos to the tens come in. And, what that means is that, there's a perception that, interest rate risk isn't as big of a risk. So you see these kind of rally because of this technical reason. But I'm more concerned right now about fundamentals. So, I mean, Zoom is obviously a great company. It's down quite a bit from the highs, but what I want to see is if they can continue to grow, drive top line in an environment where people are going back to the office, and if they're effectively, growing or expanding their TAM overseas. So that's one that I want to focus on. Workday, similar type of situation, but definitely want to see what Zoom does, because I think it'll inform, the rest of the pandemic beneficiaries.
Awesome. Appreciate that. Definitely 2 I will be watching, 3 I'll be watching as well. And Matt, I want to throw the same question over to you. Any earnings specifically you're watching for as we head into this?
Not specifically. I'm kind of thinking that in particular sense, nothing to me looks good to accumulate right now, and I don't have anything on my plate that I really am focusing on as far as something I want to monitor actively. I think the macro scale geopolitical tensions are going to, and of course, FOMC activity is going to be a bigger driving force, that it's going to be very hard for me to make sense, even short term gains or losses from good or bad earnings, I think would revert to mean on grounds of the larger scale stuff that's going on. So I wouldn't even put too much trust into any earnings coming up either. So I kind of want to zoom out and let earnings just kind of come and go for different things, and then just let the market as a whole just decide where things are going to go. So nothing yet on my plate.
Awesome. All right. Appreciate that. Catherine, I want to throw it over to you as well. So throw the same question out to you before the close. Any of these earnings you're watching specifically?
Well, based off of what Jay just said, I'm curious in Zoom. But honestly, other than that, I'll be tuning in to see what the what's said. I'll probably be reading the transcripts after. But really, this week for me and for the street, at least the video team, we're focused on Russia, Ukraine, and just kind of seeing how that plays out.
Yeah, the macro stuff is definitely taking the headlines over everything else. Definitely last week, Thursday, you could not talk about anything else. That was the only thing that was going on. I will say today, Russia, Ukraine is definitely the focus on everyone's minds, 100%. And it's definitely not lost on us what is going on there, and the humanitarian crisis, and prayers are definitely with the people of Ukraine. But just with this week, it does feel like there's a couple more market headlines. Still definitely the main thing is Russia, Ukraine, but there's still some other stuff breaking in here and there. But yeah, perfect. All right, Brad, I want to get you back into this. I'm pretty sure we got Progeny. I may always say it wrong. I know we got GoodRx, but anything else after the close today for you?
Those are really the only 2 in the portfolio that I own, but I mean, Jay brought up Zoom, and that's, I mean, that'll be fascinating to me, just not because I own the company, but because I do own another COVID beneficiary, massive COVID beneficiary that we've talked about already, which is Teladoc. So just kind of focusing in measuring, it's not a perfect measurement, because I mean, it's a healthcare company and one is a video communications company, but still looking at organic growth rates and kind of comparing how sustainable growth in a post macro world where everything was going their way, how sustainable that growth looks, and looking at Zooms and looking at the Pinterests of the world, and the pure COVID beneficiaries, Peloton and DocuSign. So far, it looks like Teladoc is holding up much better, but we'll see how Zoom does. I mean, Eric Yuan is a fantastic CEO, so it wouldn't be surprising to me at all if he had a great quarter. But we will see, and yeah, all I can say on Zoom is we will see. But for other reports that I'll be looking at that I haven't mentioned yet, Green Thumb is one of the American cannabis companies that I own that will be reporting. There's a lot of projects in Virginia and New York that have been in the works for a few quarters that should be starting to come online. So with these companies, it's real sequential growth is really, it looks like a staircase because I mean, yes, they do get decent same store sales growth, but really the bulk of this growth is from growing store count and growing manufacturing footprint. So When all these projects come online, we see large step ups in their performance, and in Green Thumb's case, their GAAP net income profitable and hyper growth performance, and it should be another strong quarter for them. Again, and I've said should be a strong quarter over and over and over again. I'm not commenting on the price response at all to these quarters, just solely commenting on how I think the numbers are going to look. And obviously, I always reserve the right to be wrong. But number 5 would be Duolingo, which is a recent IPO, which I'm sure a lot of people know about, but a language learning company that's kind of evolving into an online learning company in several different subjects. They were another large COVID beneficiary, but seem to be coming out of it a little bit quicker than most people. They've already resurpassed their record high MAUs that were massively pulled forward from the pandemic. And yeah, for Duolingo specifically, it's about converting this massive base of monthly active users they have to subscribers, because that's really where the bulk of their revenue comes from. They've gotten that to about 3%, from about 3% to 5%. That needs to go a lot higher. I mean, when you look across the industry at maybe Tinder or Hinge, it's in the teens. So there's a long way to go for them, and they need to keep going. But I see there's a hand up, and I forgot to look at the screen to check. So go ahead, Ev.
No, you're good, dude. We just head to the close. I did see Micron said they're going to be reporting earnings after the market's closed on Tuesday, March 29th. But Catherine, I see you have your hands up, and I'll keep looking for earnings and stuff. We have a couple stuff out now.
I have to run in just a minute, but something that you said, Brad, about you being an investor in Teladoc. I haven't really been monitoring that story this closely, but I'm curious to know what your thoughts are on this Amazon teaming up with Teladoc.
Yeah, you might have muted the conversation a few minutes ago, because I went through it pretty densely, but I'll go through it really quickly again. To me, it's not going to be a massive upfront revenue driver for the company. It's just an integration with Alexa. But to me, also, it could be the first step of many things to come. And this bear case against Teladoc of Amazon coming in and eating 100% of the industry and just being a monopoly within virtual care, them actively seeking out partners to fill the void of some of this value prop that they can't do themselves is evidence actively against that. So I don't think it's going to be a massive top line or bottom line driver in 2022. It could be in the distant future, but I do think it could kind of make sentiment that is overwhelmingly negative right now a little bit more positive for this company, because it seems like Amazon isn't going to be able to do this all by themselves. Like a lot of people who exist in healthcare and live in healthcare know no company can do on their own. But nevertheless, there were a lot of people, there was a large cohort that thought Amazon was going to be the vertical integrator of the industry and the monopolizer of the industry. And to be fair, if any company can do it, it's Amazon, but it doesn't look like any company can do it. And I think this is just an anecdotal piece of data pointing to that being true.
Well, I apologize for making you repeat that, because my Twitter did crash, but thank you so much for repeating that, because it was helpful for me.
No worries at all. I love talking about stocks. So if you have any other questions, I'm happy to talk about Teladoc and Amazon again, honestly, if you want me to. So but probably nobody else wants to hear that, so we can go back to Evan and move forward with some earnings.
Yeah, I do got a couple earnings crossing. We got Luminar, ticker LAZR, tiny company, and at least in revenue wise. Reported earnings, EPS was negative 12 cents, missing expectations of negative 11 cents. Then revenue was 12.3 million with an M. It's a tiny number there. They reported, which beat expectations of 11.83 million. Then Smile Direct Club, ticker SDC, they just reported earnings, reporting EPS of negative 25 cents, which beat expectations of negative 20 cents. And then revenue of 126 million, missing expectations of 127.7 million. Workday, ticker WDAY, just reported earnings, posting numbers of EPS of 78 cents, which beat expectations of 71 cents, and then revenue of 1.38 billion, which beat expectations of 1.36 billion. Novavax also crossed, but I haven't seen the numbers just yet. You there, Wolf?
Yeah, I'm here.
Ev, I actually unfortunately have to take off abruptly and rudely, so I apologize, but thank you so much for having me, and everyone have a great night, and looking forward to a lot more talk this week.
No worries, dude. Appreciate you coming on.
Sounds good.
We'll
Take
stay
care,
live
Brad.
for a little bit longer. We still got a couple more earnings coming. I'm waiting on Lucid to cross, and Zoom are the two big ones.
Smile Direct Club is down 10% after hours.
Really? Okay. What about how is Workday moving?
Workday?
Yeah, ticker WDAY.
Up 7.5% after hours.
Okay. It did beat on top and bottom line both there. I could dig a little bit deeper into that. First of all, big shout out to Matt for still being up here with us. Big shout out to him. Fantastic account. Did we ever get to 10K yet? I know we were on that journey. Okay, 6K. Maybe I'm thinking of TSDR, but Matt, criminally
Yeah.
go in
TSDR
and
is
check
almost
out
at
his
10.
account. Check
Thank
this
you
guy.
so
Matt
much.
should almost be at 10K as well. So let's go in there. Check if you're not in here following his account. 100% do it. Make sure you hit that follow button. Fantastic stuff. Fantastic speaker. Big shout out to him for still being up here with us. Love you, Matt. Appreciate that. Big shout
Thanks,
out to
buddy.
Wolf and Bullish Rippers for putting on a fantastic space. I'm seeing Zoom just cross, Rocket Lab just cross. I have Novavax's numbers, ticker NVAX. Their EPS was, I'm seeing a negative $11.18, but yeah, negative $11.18. So there we are in EPS, and then revenue was 222.2 million, scary, down from 279 million same quarter last year. Lucid's out as well. Zoom's out as well.
Zoom's down 13.5% after hours.
13.5%, really? What's Lucid doing?
15.5%. So Zoom is down 13.5%. Lucid is currently down 1% in after hours. What's up, Wolfie?
What's up, guys? I posted something at the top I think people could take a look at. I posted it earlier on my feed, but it's all of the implied volatility and options going into the print for all of the names that had reports today and tomorrow.
Zoom, and that's Bill McDermott to the board of directors. I got the numbers out here. First of all, shout out to Wolfie. Big fan of you. We haven't been on many of these spaces anymore recently, but definitely love hearing your stuff and your tweets. So check that out above. Zoom reported an EPS of $1.29, which beat expectations of $1.05. Revenue of $1.07 billion, which beat expectations of $1.05 billion. They came in and announced a $1 billion share buyback plan. For next quarter, they see revenue coming in between $1.07 billion to $1.075 billion, below estimates of $1.1 billion. So you said Zoom hasn't moved, right? Lucid was
Zoom is
tanking or
down.
Zoom tanking?
Zoom was
Okay,
down
so
15.5%. It's now down only 7.5%. It rebounded about 8%.
GoodRx is out as well. I'm sad Brad had to leave. But
GDRX is,
I'm a little surprised on the Zoom numbers. I think if I'm looking at this correctly, it's the forward guide, which is the problem, which actually it is on EPS as well. So great quarter, announced a share buyback plan as well, and getting beaten down on forward guide, which I think, not that we didn't already know this, but that's everything, forward guide.
Lucid down 5%. It did have a 9.5% run up today, though, 9.75. So still decently in the gains, and it's coming back up. It's teetering around -4, -5%. Zoom still teetering just around. It's down 10% right now, but it's been down as much as 15% and come back to as much as just down 7%. SDC, Smile Direct Club, still rebounding too. Yeah, after falling pretty hard in after hours, it is now down 4.5% in after hours. That's about an 11% move back upwards. I think NVAX
announced a $250 million share buyback, but NVAX did report as well, by the way.
GoodRx down 7.6%. NVAX, Novavax up 8%. Those are the major ones.
I want to see these Lucid numbers, like the actual thing. I haven't been able to get them full in here. I don't know if anyone else. Wolfie, I see you have your hand up.
Yeah, so Zoom issued downside guidance. EPS of 86 cents to 88 cents excludes non-recurring versus 104 estimate. And then they issued downside guidance for fiscal 23. It says EPS 345, 351 versus 440. Fiscal 23 revenues 453 versus 473 expected. That's why they're down. I'll give you, what was the one you wanted? NVAX? I'll give it to you as soon as I see it.
I'm seeing Lucid as well. They reported EPS of negative 64 cents and then revenue of $26.4 million. It is crazy for me seeing like companies rank market cap 10 billion plus reporting revenues in the millions.
How did Lucid even get to $26 million of revenue?
They started selling some cars, right? I mean, they had like the callback or recall or whatever the word is there. Wasn't it like 10% or whatever? And it was 200 cars, and I guess at the expensive price.
So, Novavax,
Harsh move for Novavax. Came back. Now it's negative.
yeah, so they shared expanded analysis for phase 3 clinical trial in the UK, showed high level of efficacy. That's what spiked it. And then they reported a miss of 938, miss on revs, fiscal 22 at midpoint below consensus. They reported a loss of 1118 versus 938, worse than the expected consensus of a loss of $1.80. So they really shit the bed. They dropped the analysis for phase 3 clinical trial first, which spiked it, and then they gave you a really bad print. So they lost 1118 versus an expectation of a loss of $1.80.
They're positive though in after hours.
Oh, interesting. I don't know. I'm just showing
Yeah.
you what I'm seeing.
No, I totally hear what you're saying. They're up 3% right now.
I agree. Those numbers I'm looking at here, if you just showed me that with nothing else, I would have told you down big.
Zoom and Lucid are both falling farther. Zoom's down 10.5% after that small rebound. Lucid is down 6.64%.
Just a heads up too. I post all of these prints, so if you're having trouble hearing it, you can just click on my feed. It's there.
Wolf, I do think that is pretty much all the large earnings that we had today that I've seen so far. Rocket Lab, they came in, ticker RKLB, sorry. Revenue was 27.5 million, which beat expectations of 24.17 million. Let's check on the price move for Rocket Lab. It's up. Whatever. If anyone cares about this stock as well, Big C Commerce. I saw some people talking about it on Twitter. They reported EPS of negative 17 cents, which missed expectations. Which missed expectations of negative 13 cents, and then revenue of 64.9 million, which beat expectations of 62 million. I don't know if anyone cares about that one. Forward guide for that revenue was in line with estimates. It was right about what it was. Looking at Lucid, seeing if I see anything. People are saying the year-over-year expectations were negative $11.11. I don't know if that quite was the expectations, or if that's the year-over-year number. I apologize on that. They cut their FY 2022 to production guide to 12 to 14K units from 20K units guide before that. So I think that's a big deal for Lucid. But yeah, I think that's pretty good with all that stuff.
Okay. Still looking, seeing if anything else is making a big move, but it seems like stuff is kind of settling into their moves. Lucid down 8% right now. Zoom down 8% as well. Kind of been around that -8, -10%. Don't see a ton more happening there. I think NVAX is probably going to be the one that does a little bit more moving around. It's still positive. It's up 1%, but it's obviously been up, down, sideways, all that type of stuff.
So Lucid signed an agreement for a full production factory in Saudi Arabia. Not sure if you said that.
I have to dig a little bit more into these type of reports. I didn't get it off the head. I did not. Let me look into this a little bit. Was it just as simple as that? Looked a little complicated.
Agreements are expected to accelerate Saudi Arabia's strategic goal to transform and diversify its economy through a development of sustainable energy and transportation. Lucid estimates that the location of Lucid's first international manufacturing plant may result in up to 3.4 billion of value for Lucid over the next 15 years and will enable Lucid to address growing demand for Lucid's products internationally.
Gotcha. So we'll see what's happening with that one. I do like how it's always just kind of like May, and obviously you can't predict how much it is, but 3.4 billion is a big number. But also, it is difficult because, like I said, Lucid is a company doing revenue in the millions when this is in the low millions, might I add, when this is a multi-tens of billion dollars market cap company. So it is odd, but I guess when you start to see that $3.4 billion, you can, I guess, maybe get it, but I still fully don't. But yeah, the 12 to 14K guide for Lucid as well is pretty below, down from 20K expectations. That's a pretty big miss. And I would expect that to be hitting the stock to be the main thing maybe right now. Wolf, do you see anything else there? You think it's just that guide?
On Lucid?
Yeah, for me, it's the production guide numbers of between 12 to 14K units
Yeah,
from prior estimates of 20K.
So the
Is
reason
what I
that
think is the big
the
thing.
reason that that's important is in January they hinted at it, and I'm pretty sure I don't remember off the top of my head, but I'm pretty sure that Saudi Arabia has a big investment in Lucid. So it seems like it's like a partnership type thing, and they're
Saudi Arabia
actually
owns like
moving forward with it.
60% of Lucid or something. It's some crazy percentage. They
Yeah,
own a huge percentage of Lucid.
yeah, but from mid January, this stuff was like it was speculated that they would do it, and it looks like they accelerated it and actually pulled the trigger, which is pretty interesting.
I'm seeing HP, ticker HPQ. They just reported earnings, posting numbers of EPS was $1.10, beating expectations of $1.02, and then revenue was $17 billion, beating expectations of $16.52 billion.
Triple D, I think, is like one that people like. 3D Systems, they just beat by 6 cents, beat on revenues and guided revenues mostly above.
Perfect. 3D is that a Kathy Wood name? I do kind of feel like I remember it from there.
Yeah, she loves the entire space.
So apparently she sold almost all of her her Palantir, right?
Yeah, she's pretty much out for all intents and purposes.
Buy high, sell low, right? Good times.
I don't know what the play was on that one. Because like there is the process of, does she extend out her portfolio as, we extend in a bull run and we get more out there stuff. And I get that. But when we kind of look at like how she was talking about Palantir and, the 5-year thesis she was pitching, it didn't really sound like that. I don't know why they sold down on this one out here. That's an interesting one for me.
Yeah, they're really unloaded. Okay, let's see what else is going on. My Wi-Fi is shit, so none of my shit's loading, so I'm not really seeing price movement right now. What's up, Bones? Yo, Bones, what's going on?
What's
You
up,
wanna weigh in
everybody?
on-
Sorry, I'm in an airport.
Gotcha, man. You want to weigh in on earnings at all, or you busy?
Just mostly listening, man. I mean, I've been mostly focusing on the crypto space. Of course, I still have like a couple equity portfolios, but yeah, man, just mostly hearing you guys talk about it. So yeah.
Sounds good. Sounds good. Matt, anything else you want to weigh in on?
No, nothing. I was just hanging out, listening to what everybody else had to say. It was an interesting into the market and watching some of these earnings play out. But it just looks kind of I don't know. That was a hard squeeze into the end, but this is an expiration day, especially with some earnings coming out and nothing really else to comment on. I think opening up tomorrow, market is possibly looking like it's going to structure bullish, but we'll have to see. Obviously. I take it day by day, and obviously today's market activity is very confusing to a lot of people. So, I really think that tomorrow is going to be a telltale sign if this is reversal territory or not. So I'll have to kind of check and touch base in the morning for sure. But nothing for this afternoon gives me any certainty of either direction.
Sounds good. Appreciate you being here.
Yeah, just hanging out, listening to what you guys have to say.
Yeah. All good. So looks like most of this stuff is out. I'm just seeing if there's any other things. I feel like we covered it really well between Wolfie and stock market news. We hit on a lot of these different areas. What their guidance was, any other pieces that they did, share buybacks. Seems like a lot of that's been covered. I think we might run maybe 5 to 10 more minutes. Evan, are there any other topics specifically that you want to hit on?
First of all, Wolfie, we should definitely get you back on one of these live earnings. I know it's sadly we're getting this at the very end of earnings season, as I know someone was talking about earlier. So maybe this is a point for the next earnings cycle, but definitely was a great addition on that. We got pretty much coverage of most of the biggest earnings. I was talking earlier. There's days where I'd say the average earnings will come out around 4:05 to 4:10. There are days where maybe we get to a little bit later. Apple's one that does it at 4:30. But today was really a day where we were done quite nice and early. So pretty good from the earnings front. I could check over and look at the heat map, and we could explore a little bit onto FinViz to get some of the final numbers from today and see some of the best and worst performers. But we're going pretty good. Let me just give you the top 3 best and worst performing large cap stocks. So that's $10 billion market cap plus, and these ones are kind of close to that 10 billion number. But number 1 best performer was Upstart, ticker UPST. That was up 16%. Then Solar Edge was the second best performer, ticker SEDG. They were up about 15%. And then Occidental Petroleum, ticker OXY, was third, up about 13%. And then switching over to the worst performers from the day, we have ticker EPAM, EPAM, or whatever, EPAM Systems. They were down 46%. Damn, gotta look into what that is. And then Viatris, ticker VTRS, they were down 24%. And then AirCap, ticker AER, was down 13% today.
Okay, good stuff.
What's
there.
EPAM Systems? I think it's in the S&P 500 too. They're down $11 billion market cap company, down 45% today.
Jesus. What happened?
Not an $11 billion market cap company anymore. Let me look. Earnings
Gotta
this
love
morning.
the big moves.
Yeah, they had earnings this morning, it looks like.
Gotcha. Guess they missed pretty bad if they dropped 45%.
Withdrew Q1 guide.
Can't do your earnings in the morning. Shout out Stacky. See her in the crowd. Also, Hipster's been coming in a lot of our spaces, which has been great. Hey, one more time, if you haven't already checked this out in the crowd, this Bullish Rippers account, my name's Gav. I run the Wolf Financial account. You can see up here, so you've probably been in some of my spaces if you're in here. You also have probably checked out some of Stock Market News' timeline, where he puts out a ton of great information on a daily basis. And this is basically the combination of that. So essentially, if you are interested in the stuff that you're seeing on my spaces and in Evan's timeline, this is kind of what we're doing on the Bullish Rippers account. So we're doing 3 spaces a week from here, where we have a ton of tweets coming out every single day from Evan, and just really good stuff all around. So again, if you like power hours and earnings analysis, long-term investing, things like that, those are the type of stuff we're going to be doing on the Bullish Rippers account, making it a great account for y'all to check out. Throw it with a follow. We're going to get this account to 20K, and then we'll do some giveaways at 20K and some stuff for the followers as I make the unilateral decision on that. With that being said, Evan, I think we can roll around, give everybody some final comments, unless there's anything else you want to throw out there.
My bad, had to get back. All I want to add is just check out, give them a follow. Big appreciation and shout out to Matt and Wolfie for coming on here, enhancing the space and helping us make it's such a fantastic one. So big shout out to them. Big shout out to Wolf for helping us put it together, and Bullish Rippers for bringing us all together. So there, and then I'll save a little bit of the rest for the end, but I'm pretty good.
Cool. Awesome. All right, let's go around. So Matt, any closing comments?
Yeah, I would say that, going from Friday into this morning, you can see how sensitive even the futures market is for a lot of these overnight moves. Going the huge gap down that we had, and then kind of that springboard volatility that came from it. It's going to be like this probably for a while. I don't really see any kind of recovery from volatility just yet. The VIX every single day just kind of surprises us. It's just pivoting. And the VVIX, which is the volatility of the VIX itself, is showing that the VIX is just still unstable and weird. I mean, VIX is gapped up, or VXX is gapped up, and it still hasn't even filled its gap yet. So it does kind of show that even though there was a little bit of a springboard this morning off of much of the stock activity and, of course, the indices themselves, it really doesn't show any signs of becoming less volatile just yet. It's a little scary looking, I would say, anytime VXX is gapped up, not filled a gap, and is slowly traded, slightly higher. It's just pressing and pressing and pressing. It's weird to see the VIX slowly grow. That's scary. So it's more and more and more people are, building volatility risk off. I say volatility risk on so that they can be positional risk off or squeeze risk off. You get margin calls coming in on large positions because of volatility. And VIX is very quick short-term hedging options for a lot of people. So normally you don't see the VIX trend up slowly. We've gone from VXX is what I like to look at, but 19 to 25 over the course of a 2-week period. It's highly unusual activity, and it doesn't really. I'm actually trying to scroll back as I'm talking to find the last time we actually just built slowly like that, and it would have been kind of about August of 2020. You just saw day over day over day the VIX slowly crept a little higher, and then it, you had an explosion at that time. VXX was probably 100, 120 value. I don't know the real value of the VIX, but seeing just the daily candles of VIX just push higher and have higher highs as the days go by, it just kind of shows that the market is very unstable short term and volatile short term, even though it's liquid long term. So any sensitivity, I'm talking anything, could trigger we call them volatility explosions, but basically when the VVIX gets so high that the VIX itself is so thin, it just takes enough positions to create a snowball. As people rush in to chase the VIX, like sold calls go in the money, they have to long the VIX, which pushes the VIX higher, which means it widens the spreads of short-term, near-term, near the money options on the S&P in the 30-day window. And the near term were the most sensitive to that. So what happens is basically like you're walking on kind of like medium ice, and all of a sudden your foot falls through the ice because there's no floor underneath you, or like an elevator starts falling as it's going up. You jump and then you're falling, and I forget if you actually touch a relative. I don't know. It's not a relativity discussion, but basically like it falls, and the market has to fall really fast to catch up with it. But the volatility could expand faster than the market sells, which always can create a snowball of a sell-off, which is one of those days that just presses lower and lower and lower. I get really scared of those when VIX does trade higher. So I'm not calling like doom and gloom here, but we call them flushes, right? The bottom jumps out for a day or two, and then the market just drops like a rock, and people buy during that. But what it does is squeeze out a lot of longs, and I always get concerned because we don't see volatility patterns like this that often with high volume as well. So you can see, even if you just plot on a daily chart, VXX has been, since the beginning of February, has been trending up about 40 million shares a day, upwards of about 75 to 100 million shares a day. So it's getting very, popular for people to go long in VIX, and I don't see that stopping anytime soon, because the fears of us getting wrapped into, or NATO getting wrapped into, global conflict obviously just has people wanting to be long the market, right? Because the post I made earlier shows that people want to be long the market, or at least not be short the market as much. But they want to hold through the volatility, which is where the VIX plays are coming in. There's long-term calls being bought in the VIX. Just kind of shows people don't want to get margin calls while they're holding through the bad stuff, which does make sense. But it doesn't indicate any kind of short-term reversal either. So like as an investor, I particularly like to take times like this to watch the market flush out and have like those 2 or 3 nasty days. And then I'll start trying to find, some value, like play small and buy some dips. But I like to let it fall first. And I mean fall. Like I'm talking one of those red days that you just have a stomach ache at the end of it, But that's basically my final thoughts is, investment wise, I'm very standoffish on risk. I'm not picking things from here for a V-up reversal, but I'm not necessarily thinking the market's going to turn bearish at all either. I think, like I said a couple months back, by Q2, I think we'll be back to recovery, and that was before Russia-Ukraine situation. But I'm still kind of in the same boat. I think as long as we don't get some major changes on the global front with a lot more participation or participating countries, I don't think the market's going to be shocked any further from additional Russia-Ukraine conflict, because it reminds me of the start of, I'm not getting long-winded here, but it reminds me of the start of Afghanistan and Iraq when we went to a campaign over there. The market's tumultuous for a little bit, but then the news stops creating, selling activity in our markets. As long as the conflict doesn't expand to other countries, other sanctions and things like that, then I think that there's not going to be much fear further, other than isolated pockets and isolated sectors of things that would be sensitive, particularly to Russia, Ukraine, and the neighboring territories. I wouldn't think that global assets will have any kind of negative mirroring of that sentiment in general. So I think that will go away pretty quick. We'd go back to being closer monitoring, FOMC and monetary policy. So that's my thoughts. Short-term volatility, long-term not bearish. And I think in 1 to 2 months, if the conflict continues, but there's not a global change, that you'll see our stock market will slowly forget that it was sensitive to that. So that's it. That's me. That's all I got today.
Awesome, Matt. Great having you on here. Appreciate the deep insight there. Short-term volatility, long-term bullish. Love to see it.
Long-term non-bearish, but yeah.
Non-bearish. Well, I'm gonna call it bullish.
Yeah.
All right.
Pretty much.
Wolfie, any closing thoughts?
So tomorrow you get the ISM manufacturing for February, construction spending for January, and then IHS manufacturing PMI for February. So it'll be interesting to see if like construction spends and if material costs increased. And so some of those sectors might see some sort of tailwind or headwind on the back of it. So think Caterpillar, Deere, etc. And then the other thing is like I don't know how much this could be emphasized, but like whatever your tolerance is stop wise, just make sure that you stick to it. It's just not the same market that it was like 3 months ago where you can just kind of average down daily and then work your way out of it. This is a headline to headline thing. And then the last thing is if you take a look at the defense names, they've been on fire. So Lockheed, Triple L, Northrop Grumman, things like that, General Dynamics, things like that. I think as soon as they start to falter, it could give you a tell about when things start to be priced in. And then on the flip side, I'm really liking. I've been in it for about a week and a half, but I'm really liking some of these cyber names, and some of them haven't really ran yet. So some of the favorites I'm not in. So Crowd, for example, I'm not in. Hasn't really run like some of the other ones. So I'm paying attention to those, see if there's any entry in the next couple of days. I don't think this is something that's going to stop as soon as the Russia thing ends. So yeah, thanks for having me up. Thanks for talking.
Awesome. Thank you, sir. One more time, up top, last pin post for anybody that's interested. Our next space will be at 7 p.m. EST. You can tap into that post and use it to easily set a reminder. There is a reminder link in there. We have great speakers coming on. Hero Dividend, multiple others. Luke Bean, really great panel. Stephen Wealthy, multimillionaires coming on there, sharing, picks that have obviously been great for them, but also things that they think are going to do well into the future. Additionally to that, our next Bullish Ripper space is going to be on Wednesday night at 8:30 p.m. EST, and that's going to be market analysis, stock market news. Is there anything else you want to add into this one before we close it out?
One more time, big shout out to the speakers who came in here and made this a fantastic space. I know a bunch of them had to drop off at this point, but even this live earnings coverage, we got Wolfie up here, was a fantastic addition for that. Someone I hope we'll definitely be seeing on more of these live earnings spaces. Once we get into this, maybe we're towards the last week of it. There might be some good days next week. I don't know, but definitely we'll be back doing these live earnings pretty much every single day, get some decent coverage there. Big shout out to all the listeners for coming in and taking some value from this space. I love doing these Ripper spaces. I love doing these Power Hour earnings spaces. So this is just a great time all around. Super blessed. Big shout out to all the speakers who came in and made this a fantastic space one last time. Make sure you check them out, give them a follow, and big shout out to Bullish Rippers. You should definitely check them out, give them a follow, making some fantastic spaces. So yeah, definitely fantastic follow. I said that one too many times in there, so I'm gonna cut ourselves off here. Big shout out one more time, and yeah, thank you, Wolf.
Yep, my pleasure. So thank you to everybody who joined up. We had thousands of people come through here over the last hour and a half. We hope that you enjoyed spending time with us. We had an hour first, a power hour, where a lot of people just gave their thoughts on upcoming, the week in the market, opportunities. Then we ran through earnings. We covered Zoom, Lucid, Smile Direct Club, Novax, and more. We are 2 followers away from breaking through 18.1 thousand followers on this Bullish Rippers account. So if anybody wants to get us over that little hump, that would be fantastic. And we'll see you all on the next space. Take care, everybody. Have a great rest of your evening and stay safe.
Awesome. Yeah, Wolf, if we didn't end the one last comment, maybe we got to do it. Anyone above, I know we were talking about the next space. If you want to just leave a like on the tweet pinned up there as well, that will do so much, make it get sent out to all of our following as well. So even if I know a lot of people don't want to go and necessarily retweet stuff, but if you do want to support us, you want to be in that later space, just hit the like button on the tweet pinned up in the nest, and that would be fantastic. Yeah, we'll get that boosted out and sent out to all of our followers. Appreciate you, Wolf.
Yep. Well said. Well, good point. I think that we got the Rippers account, through 18.1. So shout out to people in the crowd who made us happen. And good to see it. Okay. We'll see everybody on the next one. Take care.